Hey there, this is Arthur Hill, Chief Technical Strategist here at TrendInvestorPro.com. It is Thursday, September 14th, and you are tuned into a short video where we're going to cover the Russell 2000 Small Cap ETF. Now, the reason I'm talking about IWM today is because it closed below its 200-day moving average. And we're going to look at the efficacy of those signals. If you buy when you cross above, if you sell when you cross below, did it work? In other words, is this signal really something worth paying attention to? Let's hit the charts. So I've got a chart here with IWM in the main window and the 200-day moving average there. That is the red line. And then below, I've got the percent above MA indicator set at 1/201. And that basically turns green positive when the close is above the 200 days. You can see there in November. And then red when the close is below the 200-day, as you can see there in December. Now, if you go over to the upper left, you can see the chart settings, and I can change these settings as I wish. I can change the moving average. I can also calculate from the close of the high or low and turn the colors different if I want, or even add an overlay. And this indicator is part of the Trend Investor Pro Indicator Edge plugin for Stock Charts ACP. And over on the bottom right, you can see all the plugins that are available. And I just use this because it makes it really easy to see when you're above or below the 200-day moving average. You can see in February, we were over 5% above the 200-day moving average. And there in March and May, we were more than 5% below the 200-day moving average. Now, what I want to point out first is that if you look at this chart here, you can see that IWM is stuck in a range. Basically, 200 on the upper side and that 162 area on the lower side. And we've been moving to the top of the range, the bottom of the range, the top of the range, and now we're in the middle. And the 200-day is also in the middle. And moving averages are trend-following indicators. In other words, they work when markets trend. And when you have price moving in a trading range going back and forth, all you get is whipsaw signals. You get a cross above, it doesn't work because you get a cross below. And then you stall around, you get a cross above, it doesn't work because then you get a cross below. So moving averages only work when markets trend. And that, of course, is the million-dollar question. When are markets trending and where are they ranging? That's for a whole nother, that's for a book, actually. That's not for now. But the point is, IWM is not working, the 200-day is not working for IWM because it is in a trading range. But 1 year is not a long enough period to test an indicator and its efficacy. We need to go back, say, 20 years. And so that's what I did, and that's what I want to show you next. So now I'm going to move over to Amy Broker and backtest signals for the 200-day SMA cross for IWM. And basically, you would be buying on a cross above, selling on a cross below. And I'm also going to show you results if you shorted on a cross below and then covered on a cross above. So let's first look at the chart here and show you the crosses for IWM. There you can see the arrows show all the crosses here in the 200-day moving average. There's a cluster in November, and then a decline, and then a break above, and then a break below, and then a break above with a whipsaw in May, and there's the recent signal with the cross below. Now, it's hard to eyeball these signals and figure out whether it works or not. We really need to run a proper back test and quantify the results, and let's look at those results now. So here's a little table I put together with the results. This goes back for 20 years from September 2003 to September 2023. And you can see if you did a long short, your compound annual return was actually negative. So you lost money if you were shorting when IWM crossed below the 200-day and then covering when it crossed above. And you can see the maximum drawdown was 63%. Clearly not a viable strategy. And then you can see if you just took the long-only signals, which is usually what works when it comes to stocks. Short signals usually just add volatility, they increase the drawdowns, and they reduce the returns usually. And if we took a long only strategy using the 200-day cross, we got a positive return, 2%. And we were invested 68% of the time, which means 32% of the time IWM was below its 200-day moving average, and the maximum drawdown was 38%. But clearly that's not a viable strategy at all because, compound annual return of 2%, no, and the drawdown is way too big. So what does the equity curve look for a strategy like this? Well, here is IWM, the equity curve, if you were buying and selling the 200-day cross here. And yeah, you can see it moves up a little bit after the drawdowns in 2008. Here's buy and hold for SPY, and you can see it seriously outperformed just using the 200-day cross for IWM. And if we compare that to SPY, here is buying and selling SPY using the 200-day cross. And you can see it performs much better. In fact, it was outperforming up until 2014 and then started underperforming buy and hold in the last 10 years, basically. Seriously underperforming buy and hold. But you can see it's performed admirably, if I must say. The compound annual return was around 5.7%, and the maximum drawdown was 22%. And what that tells me is that there's some value in the 200-day cross for SPY and the S&P 500. There's little value in the 200-day cross for IWM and the Russell 2000. I'd pretty much ignore that. And if we get a cross in the S&P 500 at SPY, I would pay attention. So I do run back tests and I do have systematic strategies as well as discretionary trading, which is part of the chart trader offering at trendinvestorpro.com. If you look at Trend Investor Pro on the website, we offer two things: the System Trader, which is systematic strategies and signals, and then Chart Trader, which is discretionary chart analysis, looking at things like risk on and risk off, which is what we did today. Also some lagging breadth indicators, a breakdown in XLK, and SOSX, the semiconductor ETF, is teetering. I put that out in today's report, as well as 3 breakouts, bullish breakouts, in 3 defensive ETFs. If you're interested in free stuff, of course, you can click the public link at the top. And if you're interested in joining, click that join link. So that's it for today's Chart Trader. If you like this video, please give us a thumbs up. And if you'd like to be alerted when there are new postings, hit that subscribe button. Thank you very much for tuning in. I'll be back again next Tuesday with an update. Take care.